can we best take advantage of the Fed's proposed interest rate hikes in June and July from an entrepreneurship perspective and an investing perspective? Yeah. So let me kick it off with from an entrepreneurship perspective. If you need any sort of vendor financing for any products you want to buy or lease, try to lock them in now before rates go up a lot more. Also, try to raise as much capital as you can now because when rates go up a lot, not many companies are founded because people prefer to leave their money in the banks. For example, in the early 1980s, when inflation and interest rates were close to 20%, nobody invested in startups because you could buy government bonds or leave your money in the bank and make, close to 20%. So my rule of thumb for entrepreneurs when you're raising money is always raise as much money as you can when you can. Because raising money every single year and getting money from venture capital firms every year or two is such a massive distraction. Raise as much money as you can when you can. In terms of the second part of your question, which is what to do from an investing perspective to profit from higher inflation. If you're in the United States, the absolute best investment you can make, and I hardly ever recommend investments, but I put my reputation on the line on this one because this is what I own right now. But if you're in the United States, you go to treasurydirect.gov, and then you click here on Series I savings bonds. And if you invest in Series I savings bonds, you get 9.6% guaranteed, which is right here. Okay, it's guaranteed by the US government, which is the lowest risk investment in the world. The United States government is the last company, so to speak, that will ever go belly up. And so you're guaranteed 9.62%. Now, this interest rate resets every 6 months. And so if interest rates go up or inflation is higher by November 1st, what happens is the rate on this goes up as well. And if interest rates go down for some crazy reason, which wouldn't happen because inflation is rampant now, then what happens is this goes down as well. And even if we're in a deflationary environment, you still cannot lose money on this. Now, the stipulation for this to work is you have to own this for more than a year, otherwise you pay penalties. And if you cash it in within 5 years, you lose 1/4 of interest payments, which is not that bad. And the most you can do is 10 grand per person. So buy them for yourself if you have the extra capital in the United States. Get your spouse to buy them for your kids, etc., and you can gift them as well. If you're not in the United States, then what I want you to do is just go to Google or Bing if you work at Microsoft and do a search for what is the Treasury Direct or savings bonds in my country. What is the name? Yeah. So check it out if you can.